keep you updated on the capital and financial markets. Here is a recap of what happened. The central banks of Singapore and Brunei Darussalam have signed an agreement for deeper collaboration on banking and insurance supervision. The agreement will facilitate the effective supervision of banks and insurers operating across the two jurisdictions, including through information exchange and cross-border on-site inspections, the Monetary Authority of Singapore said in a statement on the 4th of February. The pact will deepen cooperation in banking and insurance supervision. As regional and global environmental, social and governance-related regulations evolve and proliferate, the costs for Asian fund firms of keeping up with the various requirements across markets will continue to rise, experts say. But with enforcement action for failing to conform with anti-greenwashing rules expected to grow, experts highlight that the potential costs and reputational risks of non-compliance are rising too. Xuan Sheng O-Yong, Singapore-based green bonds and environmental social and governance analyst at BNP Paribas Asset Management, said compliance and operational costs have continued to increase as regulators in different markets make adjustments to ESG investing and disclosure frameworks. I don't think we are close to a plateau. Asset managers and investors will continue to spend more, he said. Indonesia's pension fund industry assets rose 4.66% last year as bond gains helped offset declines in stocks, which were battered by high inflation and interest rates in global markets and the war in Ukraine. The industry ended 2022 with 342.64 trillion rupiah of total assets, up from 327.39 trillion rupiah in 2021. According to new figures published on the website of the Financial Services Authority of Indonesia. The regulator typically posts the data without providing analysis. According to a fund manager at an Indonesian asset management company, pension funds are likely to continue raising their exposure to government bonds this year. We are not out of the woods yet, and with local sovereign bonds giving yields of over 6%, it makes it hard for the pension funds to ignore, he tells Asia Asset Management, speaking on condition of anonymity. Global cash flows into funds focused on investments adhering to specific environmental, social, and governance standards sank dramatically last year amid a complicated mix of market turbulence, heightened scrutiny from U.S. states and municipalities, and increased support from the EU and U.S. governments. The popularity of U.S. ESG investments surged partly because more U.S. corporations began implementing ESG standards. Last year, the U.S. government also approved changes to fiduciary standards that made ESG funds more appealing for 401k retirement plans. At the same time, ESG investments have attracted criticism for a variety of reasons. Those include questions regarding how well fund managers pay attention to the ESG qualifications of the companies in which they invest and how stringently companies themselves actually monitor the ESG standards they claim to promote. China's mutual funds experienced the first net outflow in 10 quarters in the last 3 months of 2022 as investors pulled money out of bond and money market funds, according to IIC Analytics, a Shanghai-based investment consultancy. A newly published report from the firm noted that foreign investors offloaded their holdings of onshore bonds for 10 straight months up to November as China's monetary policy diverged from other major economies and the Chinese currency weakened. The US and European central banks have been hiking interest rates aggressively to fight inflation, but the People's Bank of China has been cutting rates to boost an ailing economy. China's 10,576 locally domiciled mutual funds registered a combined net outflow of 748 billion renminbi in the 3 months to December versus 657 billion renminbi of inflows in the third quarter, IIC Analytics says in the 8th of February report. The last time there was a net outflow was in the second quarter of 2020. This has been the FIMM TV Weekly Recap. Be informed, stay updated. Be sure to like, share and subscribe.